Hello and welcome to ATFX's US CPI preview. What we'll do today is we're going to look at the CPI data, and even though markets are being heavily driven by geopolitical factors, underlying fundamentals do have a big part to play. They're probably going to be on a longer term basis at the moment, but also if on the short term any of this data comes out a lot worse than expected or a lot better than expected, expect to see markets move and move very, very hard, even more so than they would in normal market conditions. So we're going to look at the FX majors, we're going to look at gold, and once we've done that, we'll just see where we can get what CPI could do in the longer term once all this dust has settled from the global trade conditions. So interesting factors. Obviously, markets have been moved by what Donald Trump has done with tariffs, what counter tariffs we've seen. Obviously, China's come back very hard overnight. And what we're likely to see in terms of deals, which could see some relief rallies in some of these horrific moves we've seen to the downside in stocks and risk trades. And also, if it does look like we're going to be in a new world order in the coming medium term and long term, what does that mean for how markets are going to move? But the most important thing, this US data is still key. We have heard, and one of the most important things that we did hear over last week was from Jerome Powell, that he's still not in a hurry to cut rates despite the market turmoil because inflation has remained sticky. CPI data, probably the biggest inflation data that we look at around the world. Now, we know PCE is important to the Fed, but CPI is probably just as important, and particularly in the current circumstances. So the other thing that we've had this week is there's been no real major data yet, nothing to interrupt the flow from geopolitical sentiment. And that's going to affect markets as well. So really, normally when CPI data is out, it's a major focus, but even more so this week. Having a quick look through what we've got, CPI month on month expected to come in as a 0.1% increase. So you'd look at that and say maybe we're seeing a bit of a pullback in inflation. The core CPI month on month, 0.3%. Probably not what the Fed's wanting to hear. And the year-on-year 2.6%, still away from that 2% target that they've got. So that's what Jerome Powell's talking about. Without any further ado, I'm going to move over to some of the charts and see where there's going to be some trading opportunities. We're looking at longer-term charts today because, let's be honest, with the moves we're seeing in the market at the moment, we're going to have to look on this longer-term trajectory to see where we can make money out of these trades. As always, before we get into this, please do subscribe to our channel so you get all the updates on what's going on in financial markets. So here we are, we're kicking off with the Aussie today. It's been a little bit quiet for the first quarter of the year, but volatility has taken off in the last few days. I'll bring us in. These are where we're looking at these longer term charts. So this is all the way back to Q1 2021. Aussie topping out near 78 cents. We are now down under 60 cents. I'm going to bring this chart into a little bit closer dimension for us to see what's gone on recently. This is the tariff announcement. It came off, dollar appreciated as kind of was expected. And then we had this relief rally, took us up to 64 cents. As you can see, topped out near these previous highs. And ever since then, it's pretty much been one way down underneath 60 cents. We're back above now, a little bit of volatility. Now, what we're looking at these levels, I'm going to adjust this support trend line because support will now come in around about those lows, just, what are we talking, 59.30-ish. Let's look at the CPI data. We're probably needing 0.2, 0.3 difference. So that core number, 0.3, that comes in up at 0.6. That is going to take away Fed rate cuts, which started to be heavily priced in by US futures and yields. Over the last few days, there was a pullback overnight, but we get a really big print on that. You're going to see dollar buying coming across the board. It's going to, in the Aussie in particular, it will take out these recent lows. If we're anywhere near them, break trades will come in and it's going to take us down into those mid 60s. Conversely, from the 0.3 expectation on the core number, coming 0.1 or 0, it could see us really march back up high because that inflation coming in will prompt the Fed to maybe start to look to bring in those rate cuts a lot quicker, which is what we think President Trump wants and what the market's kind of been pricing in. That's where we're sitting. Topside resistance has to sit with these recent highs at 64 cents. Above that 200-day moving average at 64.88, and above that we're all the way up to just sub 68 cents levels. The closer trading levels are, of course, on the downside, that 59.30, and underneath there's really clear air until we get down to the low 50s. So keep a very close eye on the Aussie. Over to cable. Similar sort of setup, and I've kept this in. This is a long-term trend line all the way back to 2014. And look how cable topped out very close to that resistance trend line. Key resistance level moving forward, up at 132. We're all the way back at sub 128 at the moment. This is how fast markets are moving. Looking at that year-on-year number as well. Year-on-year comes in well below that 2.6. We're going to see cable move higher as the dollar gets hit. It's going to take us back very swiftly to challenge that 132. Let's have a look now. We're around about 132.40. That's your target. After that, we're looking up here at 134.35-ish. Downside, you've got a lot of scope for cable at the moment. We're right in the middle of the range. If we get a stronger print, if that core comes in at 0.5, 0.6, if the headline number comes in 0.3 or 0.4, they're probably going to move in tandem, to be honest. Or if that year-on-year comes in closer to that 2.7, 2.8, 3 even, then we're going to see dollar buying and we're going to shoot down. We're going to be attacking these levels down around 123. So nice thing about cable, it will fly and it will fly hard. You're in the middle of the range at the moment. We're not sure where it's going to be in a couple of days' time, but perfect trading opportunity from that middle of the range position. Looking over to euro here, we got a fresh high. So we got a fresh high. There we go, just underneath 112. Previous highs around about 112. I think 112.15 was one of the better highs. Again, weaker print. We're going to take out that top side level on the trend line. We're probably going to take out 112, and it opens up the way for us to attack these levels all the way up at 122. Interesting times ahead. Same again. Downside, we get a stronger number, opens the way for the euro to retrace into the middle of the range. But once again, all of this you have to caveat with the fact that we are going to be seeing moves before this on geopolitical factors. Dollar yen, probably the hardest moving currency we've got at the moment, and is moving strongly on interest rate differentials. We dipped all the way down to sub 145 levels, 144.50 there, back up to 148. Once again, from the middle of the range, a weaker print, it will attack these lows. Stronger print, it will come up. Resistance coming in now around about 150, that 200-day average around 151.17. And we can't leave the propensity to trade this CPI data without looking at gold that has been flying around. Here's that all-time high that we hit just 3 days ago, up at 131.67. We're down just around 3,000. Recent moves, in particular this move down, has come from the dollar side of the equation. It has come as yields have sped up and they've taken some profit out of those gold moves that portfolios have made. Keep an eye on this. We have the propensity to attack that 131 level again, or downside, we're looking down around this lows that we saw the other day, or 2,800. It could be massive moves for the market. Can't reiterate enough. Expect most of the moves to still come in the market from geopolitical updates, from President Trump, from tariffs, from China counter tariffs, from EU counter tariffs, any one of the plethora of other jurisdictions, and any deals done. Deals done will be good for risk. Might see gold come off a little bit further. But overall, this CPI data, if it does print significantly off, expect some big moves. If it doesn't, you still need to take that into consideration once markets die down, see where the Fed's assessing its inflation. We may see yields creep higher and the dollar creep higher along with them. So thanks very much for listening. Good luck. If you need anything from us at ATFX, please let us know. Thank you.